Hello, welcome back to the InsTech podcast. Zoya here, and this week we're sharing a panel discussion moderated by Brian Owens, independent consultant, exploring the rise of niche catastrophe modelers. So how are specialist model providers changing the way insurers, reinsurers, and brokers evaluate risk? In this conversation featuring panellists from Fathom, Chaucer, and Reask, we dig into why flood, wildfire, hurricane, and climate risk modelling is evolving. The panel looks at what's driving the growth of newer modelling approaches, how multi-model platforms are improving access and integration, and how teams are now using models not just to price risk, but to ask better questions. If these themes resonate with you, or you're simply just interested to hear them in more depth, we are certainly exploring them at Exponential Risk London 26, which is returning on the 10th to the 11th of March next year. It's the UK's largest independent event dedicated to catastrophe, climate, and exposure analytics, with hundreds of industry professionals already signed up. The early bird pricing ends January 30th, so until then, pour yourself a coffee, enjoy the conversation, and hopefully we'll see you there.
You know, when you're building a big model which underpins an industry, there is a responsibility and a duty there, and also a kind of practical consideration that you can't jump around too much, right? It can't be too reactive to the science. That's kind of actually becoming a problem if it is. But internal view of risk can start to move at that much faster pace, right? And I think this is where the kind of the smaller model vendors, the startups, really have that agility.
I know we're talking about the rise of the niche modelers. I would just add that the work that they do is anything but niche. I think it's, climate change scenarios, flood modeling, hurricane risk, wildfire risk is very central to what the market is doing. But I'm definitely around long enough, 25, 30 years, unfortunately, to remember a time when multi-modeling was actually much more common. And a lot of practitioners or companies in the market did it through the late 2000s, 2010s. That began to change, and there were a number of reasons I can think of. I'm sure there are more, but one was obviously cost is obviously always a consideration, but there was also a rise in the level of requirements and scrutiny from regulators. And in addition to that, there was just managing model change. It became a real issue, and companies started to say, well, the only way we can really satisfy all these requirements is to move to a single platform. But actually now in the last decade or so, we've seen the appearance of a number of companies. And what we want to try and explore today is, well, why is this happening? What is the market needs? What is it these companies are providing that is making the pendulum swing back a little bit towards the multi-modeling approach? What do you think has been going on in the last decade? And what is it you guys felt you were providing in order to meet that need in the market? So Dana, do you want to kick us off with that?
Okay, with that really small question, what's happened in the last decade? I think I've been at Chaucer the entire last decade, 10 years ago. Typically, multi-model was seen as literally that. You'd have multiple versions of the same peril model. And so you took a different view. Maybe you blended, maybe you just took one and you used the other one to validate the other one, or some mix of the two. I think we've seen an evolution of the use case for other models and cat risk products, where they're filling other gaps or niches, right? Where they're being used as a specific validation tool to understand the risk behind what you would typically get out of your classical cat model. Or they are going into regions where the bigger model vendors wouldn't necessarily have models for, or perils. I mean, 10 years ago, there were flood models, but there weren't a lot and they weren't prolific. And now we have a lot of choices. They drive innovation, and they certainly have opened up a lot of transparency in terms of giving the users, in our case, trying to understand what's going on behind the scenes of the hazard of that particular model. Sometimes with a bigger vendor, that's hard to do. And it's not necessarily their job, right? They're not there to give us that access all the time. They have a different purpose, some of those products. So yeah, I think it's been a story of change of how those are used in the market.
Good. And then Joss and Olivia, what did you see in terms of that opportunity?
Yeah, absolutely. I think the opportunity there has been, it's been staged partly as well, right? You have the gaps that you were talking to, Dana, right? Kind of where they're just underserved regions. And you can call, we can say that's niche, right? We talked about this before. But for people who are writing risk there, that's kind of what they need to do that business. And there, I think you've seen this evolution as well, like starting off with hazard and then moving into even loss models in these underserved regions. And to your point, for the bigger model vendors, are they ever going to get around to doing those regions? And should they, right? Because there's a lot of other stuff which is already in the bullpen, right? But I think you've got then not just about multi-model and using models for validation, but I mean, a big part of how the industry operates is about adapting these big, the main vendor models, right? About ownership of view of risk. That's not niche either, right? That's peak peril ownership of view of risk that's front and center. It impacts the entire insurance value chain to varying degrees, right? Depending on whether or not you're an insurer or a reinsurer. So I think there's been that real opportunity to come in here and work with the research teams or complement where there aren't research teams to really augment and build out those views of risk and to just kind of really supercharge forwards when it comes to kind of getting that portfolio performance improved.
Yeah, I agree with everything that's been said, but I think from Fathom, what we're really hoping to do or trying to do is to work with people and to provide that transparency so that you can better understand, or the user can better understand the model and the science. Like Paul said, we're a science-based team, so we really love telling people about the science and we want to work with people for that as well. And also going on what Josh just said about customization. With this view of risk idea, everyone's trying to make their own view of risk. And I've worked in the market before. I worked at Fathom, so I'm aware of that side too. But certain niche models or these smaller models now, the specialist single peril models, really are more nimble and able to respond to that, to help people to develop their view of risk using the framework that the model can provide. For example, the model we have, the global flood cat model, the user can use their own vulnerability, they can scale the hazard, they can consider all sorts of different proprietary information about defenses. So really we're providing a framework for someone to develop their own view of risk. And I think that's creating a lot of value for the users as well.
So, I mean, we've talked now about what has been going on and then a little bit into the why. So you talk about, views of risk and, is it as straightforward as 2 legs good, 4 legs better, more views of risk are better than one view of risk? So, or what are the other benefits, advantages do you think that Fathom and Reask are bringing to the market?
I think the single peril models are really based in that science understanding, as I mentioned before. In terms of the other benefits, that we're fully transparent. We're able to help you understand the methodologies. There's no black box anymore. Everything's published and able to be downloaded by anyone who wants it and can use it. In terms of other uses for the model, I think that's important as well. Like maybe in the past, these models were pretty much used for the main purposes, pricing, underwriting. But now there's so many more problems in the industry or issues to consider, for example, climate change, all the different regulatory needs, that some of these smaller models can help address those questions as well.
And there's a real need to keep these things refreshed and up to date quickly. So Josh, what would you say to that?
Yeah, I think when you say refreshed and up to date quickly, hits a nail on the head, right? I think that nimbleness is so important, right? Because I think quite often when you're building a big model which underpins an industry, there is a responsibility and a duty there, and also a kind of practical consideration that you can't jump around too much, right? It can't be too reactive to the science. That's kind of actually becoming a problem if it is. But internal view of risk can start to move at that much faster pace, right? And I think this is where the kind of the smaller model vendors, the startups, really have that agility and also that ability to work very closely. I mean, I would say certainly at Reask, we're not a product-oriented mindset. We have a problem-solving oriented mindset, right? So we actually like to bring people in, like what you say, like kind of open, open communication of methodologies, peer-reviewed methodologies. But then there's that encouragement of people to pull that stuff apart so you can actually kind of continue to iterate and evolve faster and faster. Because that's what we see, like the climate change issue about, how climate will change in the future, but also how it may have changed already. That's a hard problem, right? And you can't just look at it and say that's solved and put it down. You need to kind of be iterating on that. You need to be adapting as the science evolves. And I think the smaller model providers just do it really well, to be honest.
You mentioned before working like research teams working alongside your clients and being able to sort of make sure they understand everything that you're doing and putting in. Dana, from your point of view as a head of research as a large insurer, what do you think?
You fill this niche very well, because I wouldn't necessarily expect one of the main model vendors to adapt, as you said, to changing risk that quickly. We rely on them to be the benchmarks for that kind of base level view of risk. That's what you build your adjustment on top of, so you can take a view. If that was moving around a lot, then you're lost, to be honest, because what's your percentage change against then? If you're going to increase Cat 4s by 15%, what is it against? So that baseline view of risk needs to stay fairly consistent. We've seen, there's been many attempts by them to get into evaluating climate change risk with different products. But again, one of the things that companies like Chaucer really want to understand about those problems, we're not after just the answer, right? We want to be part of creating that solution. And this is where companies like Fathom and Reask, who are arguably two of the best at doing this is where you come in, because you make your clients part of that solution to get to those numbers. So the absolute number itself isn't really that relevant. It's how you got there. And that's ultimately what you bring back into the company, because you're trying to get everyone to understand what the risk means and how this risk is changing. And that's one of the best ways to do it. And it's not something that's easy to access without companies like this.
You mentioned, having a fairly stable baseline view of risk. I mean, do you get increasingly asked for, we need a scenario for this, a scenario for this, a sensitivity test for this, a climate change scenario, the need to actually just respond very quickly to it, right?
Yeah, I mean, you're definitely getting a lot of that. It's probably the scenarios are really more on the tertiary markets, which are maybe they're quite a bit less mature than the typical markets that we deal with, where the established cat models reign supreme in terms of setting pricing. You get a little bit of that in the non-nat cat side as well, right? A lot of requests about scenarios and how to evaluate those. That is a big unknown, right? I think that's probably a big space, right? Is all the non-nat cat risks that are out there, which a lot of us are scratching our heads about. How do we sophisticately evaluate these risks?
This being an INS tech event, I think we'd be remiss if we didn't mention tech. In my kind of experience, drivers of innovation and change and platforms and models, you've obviously get requests from regulators, you get requests from clients, we want this, we like this, it's important. A big event happens, you get lots of data, you can refresh the model. But a lot of it, to me, has been around technology as an enabler of model change, right? So even in my days in the last 20 years, just being able to build bigger, more functionally rich, more higher resolution, faster models is really important. But I get the sense, just even from the discussion we had at the beginning, the technology is just, you mentioned AI, technology is just moving on really, really quickly. And so I just wanted to ask you guys about, what it is about the technological approaches that you have that is differentiating from say some of the other models that are out there. And I'll start with Olivia.
It's probably fair to say that at Fathom, given we're a full team of mostly scientists, it's actually pretty difficult to stop people working with these technological advances and playing around with them and testing them out. So we're always trying to use things in different ways. Yeah, AI has been mentioned. So that's obviously a big topic. Things like new algorithms, machine learning, enhanced sensor technologies, those are all of interest to us at Fathom and elsewhere, I'm sure, and have really lent a lot to our development of terrain data, which Paul was talking about in the intro. So really making the fidelity of that terrain data much more comparable with LiDAR. And for a global model, that's really important. We obviously don't have LiDAR quality data, terrain data across the globe. So being able to enhance that and have a comparable product is really important. It's probably also worth saying that these kind of machine learning techniques can be used for things like defenses. So in flooding, again, we don't have a global database of flood defenses, but we need to augment that where we can. And things like machine learning techniques can help us do that. There's also so many interesting projects going on. For example, SWOT, which is the Surface, Water and Ocean Satellite Mission, Topography Satellite Mission Project. And that is really groundbreaking in terms of better understanding things like the flow of water across the Earth's surface, and will then be able to be fed back into our underlying hydrology of the models and products that Fathom works on.
Do you mind explaining maybe some of the innovations that Fathom have done on the flood defenses in particular? Because I think it's a huge problem, right, for flood, and typically databases are used, but we know that they're lackluster. They don't have all of the information that they need, particularly when you move out of mature markets.
Yeah, thanks for highlighting that. We use machine learning techniques or techniques like that, which can find or recognize defense objects in LiDAR or terrain data. So where we don't have the information about it, published information about this certain defense is in this location, and it provides a standard of protection. We can then use those technologies to kind of provide a layer over the underlying terrain data and assess where those defenses might be. And that's really helpful. I mean, if you imagine, we know where defenses are in the big cities, in the big countries. We don't know defenses where all over the world in different countries. So that's really important for us. And it forms a big part of the model as well. The underlying, we provide defended and undefended views. So that's a really big part of that as well.
Josh, your thoughts?
Yeah, totally. I mean, it's machine learning methodologies as well, right? Kind of what underpin our models. It's very important to keep in mind that you need to understand why the model's doing what it does, right, and how it works. Right? You can't just black box it. I think there is a bit of a trap there with AI to fall into there. So we don't do that, right? So, I mean, really what we focus on is what drives tropical cyclone risk globally, right? And what are those climate connectors which control that correlation, for example, between the Northwest Pacific and the North Atlantic, right? And how do we build those into the model? How do we do it globally? That's kind of how you're capturing that in what you're doing. But then there's a pretty simple nuts and bolts thing is doing it globally, right? That's hard. The other thing is having enough years in your stochastic event set so you are actually capturing the risk with confidence. I think we see this even in peak power regions like the US, right? In the Northeast US. There's real problems there with what I call event saturation, right? With do you have enough Cat 4s, Cat 5s in your risk models today? With people kind of looking at whether or not they should diversify into these regions with what's going on in Florida. You need to have a little bit more confidence in that. So I would say that's certainly something that we're looking at is not just how can we use these kind of these techniques and really get that full kind of behavior of that system in place, but how can we also kind of do it to a stage where it's actually improving the decision making, which is being based off it.
I think the point about the saturation or gaps in your tail, right, is really crucial. This is like, I mean, that's sub niche, right? We're getting into like not just the peril region, but a part of a peril region and using an alternate product or model to really fill in those gaps and where you think your portfolio might not have enough extreme events in your catalog. To the point of technology, most of these products moving into the cloud does enable larger events as the global aspect. You know, we are going to be required from a regulatory side to more often respond to how different perils correlate within a region and how regions correlate with each other. And, you know, that ability to do that hinges on whether or not we have products which are predicated on fully correlated drivers.
We had talked earlier as well about single peril models, but on platforms like IORP or Model Exchange. I know there were some kind of thoughts that people wanted to express about.
Yeah, sure. I think this goes partly back to the beginning of our conversation about why has there been a rise in these kinds of models in the last 10 years, perhaps. And that can only improve going forwards in terms of these multi-model platforms, which make it easy for people to access. Because we can make the best models in the world, but if people can't access them easily, then it's obvious that they don't want to use them.
Yeah, multi-model platforms, great for being able to have kind of access to the smaller models and things like that. And I think it's quite nice to see things living, because a lot of this kind of stuff is complementary, right? And so to see it kind of living in one space is good. I would say one thing to be aware of with platforms, that there is a bit of a tendency to think, well, you know, kind of if you put models out on your platform, then you control the access to the data, right? And it can start to become view of risk, but on my terms, right, as a provider. And we should totally not take that approach, right? It should be view of risk on the customer's terms, right? And if they need access to certain parts of models, we need to make sure they're getting that. If they need that to be able to kind of to develop their view, we shouldn't be paranoid or overly defensive. So I think that openness and transparency doesn't just come through to how we're communicating the science and the assumptions which underpin our models, but also in how we're allowing people to access different components of that, right? We shouldn't like, oh, you know, I licensed this model and this platform because it's really hard to work with. Said nobody ever, right? So we need to make ourselves, as we kind of go down this route, easy to work with and for the customer to get what they need out of it.
I guess this is potentially controversial. I mean, my boss is in the audience, but I think Oasis is probably the most important multi-model platform because of its origins and the open data standards. It's what's driven innovation. It gives a pathway to new companies coming into the market. Gives us access that we can use them. I mean, I say this from quite an ignorant perspective because we never actually have run a model on Oasis, so I'd take that as you will. But the other platforms, the fact that they have opened up to allowing Oasis models to be run on them, or, that is in the works, I think is fantastic. A lot of these things it's a really big upfront cost, and we're kind of past the era for a lot of companies where you can have multiple different platforms, and you might just have one platform and you still want to be able to access all these different tools and models. So the fact that they're opening that up really does make a big difference. But yeah, I still think the Oasis one is like, it breathes life into everything that we do, right? It's what's driving innovation. So.
The final question is around the future. I mean, we've been talking about what's been going on in the last decade or so, but how do you keep it going? And what is potentially something that could, put the brakes on it or be some pitfalls to avoid?
The volume is just like a massive obstacle. Like, we're moving from the kind of cat models of 10, 15 years ago to where we are even today with some of the newer models and products. They're so huge. Even if it's in the cloud, presents a huge challenge because companies still have to internalize that data at some point. And you got to bring it back in and work with it. When you have a multitude of different options, like imagine US flood, like how many US flood models there are, like that is a really daunting task from my perspective. If you're going to try to validate and pick the best view for your company, it's hard. Just choice, which is great. It's a great problem to have, but it is an obstacle, right?
Yeah, I would say on this, the pitfall, and I've just said it, I'm going to say it again, right? It's not really understanding like the customer or, the user and the business decisions that they're trying to make, right? Whether or not that is the gaps that you're looking to close or that you're looking to improve, or implementation problems, right? And where those pain points are. Where you can be in the future, though, I mean, I think for us, certainly, and we're not alone in this space thinking this way, it's about scaling how we already think about certain things, like tropical cyclone is our bread and butter, but how we're thinking about that to other perils, right? So wildfire, we've started building wildfire models, right? Because the principles which underpin it, the way of thinking, the problems we're looking to solve are actually very similar, right? And so we have that agility to be able to roll that out. And when we have the conversations around integration and things like that, right, with our customers, they might say, the problem is this is really hard to integrate for X, Y, Z reason. We're kind of the scale where we can say, okay, tell us exactly what you need, we'll build it. And to your point about what will stop it, I don't think anything will. I think that ability to respond, I hate to use the word reactive because a lot of it is proactive, but I think that's very, there's no stopping that, right? It'll put an obstacle in the way, but I just see kind of the attitude and the way of approaching these problems. It's just break it.
Very optimistic. Okay, final word there, Olivia.
It's quite difficult sometimes for people to get to a new platform, to understand a new Oasis type of model. But I think going forwards, the only way to carry on through that is to work together, carry on the collaboration with the Oasis team. But yeah, making sure that there's standardization, because if all the models are Oasis based, all these niche smaller models, it will massively help anyone wanting to use them. It will reduce the barrier to entry in terms of not just cost, but also the learning or the uptake of being able to use the models, the methodologies, getting to grips with them. That if that's a bit standardized using Oasis, that will help. And the platform problem will hopefully get better over time as well, with all the developments in the market going on around that too.
We're almost at the end. I'm just going to go down the line. One thing each that you want the audience to remember.
I think from a user of the product's perspective, it comes down to every business is different and every portfolio is different and your use cases are all different. There might be some overlap, but ultimately your niche is sort of your business, right? And you have to understand that. And that's, how you use these tools is ultimately up to you.
There's the opportunity with the smaller providers and smaller vendors to really to see them as this kind of trusted partner for problem solving, right? It's almost like the A-team, right? If you've got a problem and you're not sure how to solve it, you can go and have these very open conversations with these providers. That's a real growth area, and certainly I've seen big changes there. I think people should continue to kind of view the sector of the vendor world in that way.
Building on that a little bit, these models, if you haven't interacted with them before, it's maybe a good idea to remember that they're very flexible. They're able to be incorporated into your view of risk, your business. They have many different options for downloading or even using the proprietary information, the Fathom defaults, for example, for us, or you can use your own information about defenses or vulnerability. So they're really more like a framework model rather than we're sending you a model and you just use it how it is. It's more like a framework. And that goes for all of these kinds of models as well. They're really interactive and can be kind of tweaked according to your business.
And I was very struck as well in the conversation about the idea of transparency. And at a more general level in my many years of talking to regulators, rating agencies, clients, that people will almost invariably gravitate on conversations and explanations that they can understand. And it also helps them, I think, in their own further conversations with other people. So I think that's a very, very important thing that these models bring to the table.
Well, if you've made it this far, then I'm pretty sure you found that as interesting as I did. The InsTech podcast comes out every Sunday morning, where we spotlight the latest news, leading voices, and freshest updates across insurance that you need to know about. If you would like to take part in these conversations, head to www.instech.co to find out how you can join our network and be a part of the insurance intelligence for the curious.